Hello and welcome to Energy Insights, your source for the latest developments shaping the global energy markets. Today, episodes cover the Tesla sluggish quarter, LNG markets, resales, oil and gas prices, energy stocks update. So, we are covering four major stories influencing the energy markets worldwide. That's the Tesla's electric vehicle sales slowdown and its implications. Global LNG market trends, including China resales and the commissioning of the Golden Pass LNG terminal. Latest crude oil, natural gas, and the refined products prices. Energy stocks and equity market performance across oil, gas, LNG, and renewables. By the end of this video, you will understand how these events are shaping energy security, commodity markets, and investment strategies globally. So let's dive into segment one, which covers the Tesla's and electric vehicle market trends. Tesla has reported a sluggish quarter with deliveries and revenues below market's expectations. Analysts suggest this may signal a new normal for electric vehicle sales as global demand begins to stabilize after years of rapid growth. The key factors influencing the EV market are rising interest rates and inflation impacting consumer spending on high ticket electric vehicles, tapering incentives in mature markets, reducing urgency for adoption, intensifying competition from both the legacy automakers and the new EV entrants. Supply chain considerations, including chip shortages and logistic challenges, shifts in consumer preferences with buyers waiting for next generation EV models with longer range and improved features. So the implications are the EV market growth is transition from hyper growth to steady sustainable adoption. Tesla remains a technology and production leader, particularly in batteries, softwares, and global manufacturing. Competitors may capture market share while investors watch regulatory and market shifts closely. So, in our today's segment 2, we are looking to the global LNG market trends. Here we have two stories. One is about the China LNG resales. China has recently resold a record of LNG volumes to optimize imports and take advantage of the price arbitrage in global markets. Helps manage domestic storage and seasonal demand fluctuations. It capitalizes on price differences, selling LNG at higher prices in other regions. Influences regional LNG pricing, supporting other buyers' supply needs. So the implications are the flexible trading strategies are reshaping global LNG flows. Exporters capturing price premiums benefit from market agility. Policymakers and investors should monitor these volumes as they influence spot and long-term contracts. Similarly, the last part of our segment 2 is another story, that's the Golden Pass LNG commissioning, a mega story of the sector right at the moment. Meanwhile, the Golden Pass LNG export project in Texas, which is a 70-30 joint venture between Qatar Energy and ExxonMobil respectively, has achieved a major milestones. Train 1 has been commissioned and produced its first LNG marking the start of commercial operations. There are total 3 trains in the Golden Pass, each with the peak capacity of 6 MPTA with nominal capacity of 5.2 MPTA. So eventually 18 million metric tons per year across 3 trains, but at this moment the train 1 has been commissioned. That means 6 MPTA has been commissioned. Its location is very strategic. That's the Sabine Pass, Texas, with deep water access for the global shipments. Its economic and strategic significance is also very important because it supports the US LNG export to Europe and Asia, diversifying supply amid tight global markets. So the implications of this commissioning are that the Golden Pass commissioning strengthens US LNG export capacity and the global energy security. The first cargoes later this year will help ease regional supply tightness. Highlights the importance of the infrastructure investment and flexibility in the global LNG trading. Right now, the Qatar energy is under stress due to a situation in the Middle East. But in the parallel, it's a good luck and it's a very important initiative, the Qatar Energy, that right at the moment they commission the train one of the Golden Pass, which would release pressure on them, particularly their capacity commitment to various buyers. In segment 3, we are looking to the energy commodity market snapshot. Energy commodities continue to show stronger global performance due to tight supply, high demand, and geopolitical uncertainty. In case of the crude oil, WTI price remain 99.2 dollar per MMBTU per barrel, not MMBTU, which is a decrease in the comparison of yesterday price with the percentage of 2.15%. Similarly, Brent price also showed a decrease of around 2.28%, which is where its price remained today 101.6 dollar per barrel. Similarly, the Marban remained 104.4 dollar per barrel, which also shows a downside moment of 2.27%. In case of natural gas price, that also in the Henry Hub, that also showed a downside moment of 1.8%, almost 2%, where its price remained $2.83 per MMBTU. In case of refined products, the gasoline price remained 3.107 dollar per barrel, which is also a decrease in comparison of yesterday price with a percent of 3.04%. Heating oil also moved downside with a 2.47% decrease, and its price remained $4.012 per gallon. Similarly, the WTI Midland price remained on the downside of with the figure 2.89% decrease, and it remained $103.1 per barrel. In case of the benchmark basket prices, OPEC basket price remained 123.2 dollar per barrel, which is an increase of in comparison of last month. That's 5.2%. Similarly, the Indian basket remained $124.9, which is almost 125, and which is an increase of 3.05%. The IEA, International Energy Agency, warned that any disruption around the Strait of Hormuz could tighten markets further. Strategic reserves may provide temporary relief, but persistent supply shocks could reverse today's softening prices, highlighting market sensitivity to geopolitical risks. So this was our today's segment 3 of the today's episode. Now we are diving to the segment 4, which is the energy stocks and market performance. We are covering these. So energy stocks are outperforming broader markets fueled by rising commodity prices and infrastructure control. The key companies in the case of the oil and gas majors like ExxonMobil, Chevron, Shell, British Petroleum, and Total Energies. In case of LNG and gas infrastructure, Cheniere Energy, Golar LNG, Equinor, ENI. In case of renewables, Nexextra Energy, Ørsted, Vestas, Wind Systems, they also remain a very positive note. So integration of production, transport, and storage drives value. Companies controlling both the resources and infrastructure are better positioned to withstand the shocks and capitalize on price swings. Energy equities are no longer just commodity plays, they are strategic investments combining market exposure with infrastructure security. This is what we yesterday also mentioned, this statement. To summarize our today's episode, what we have looked into and what we concluded that the Tesla EV slowdown, global LNG resales, and the Golden Pass commissioning, rising energy commodities, and surging energy stocks point to a new era in the global energy market. Strategic infrastructure, supply security, and market positioning are now as critical as production. Energy is no longer only about resources, it's also about managing flows, logistics, and market risks. Thank you for watching Energy Insights. If you found this analysis useful, please like the video, subscribe to the channel, and turn on notification so you never miss updates on the global energy markets. Thank you for watching Energy Insights.